The S&P 500 traded at 5-year highs Wednesday after a key vote on extending the debt ceiling was passed. Now, Kenny, does that mean that immediate worries about the debt ceiling are now over?
Well, the immediate worries are over because that was going to happen in 4 days, right? And so what they've done is they've managed to kick the can down the road. They've actually now just rearranged the chairs on the deck, right? Because now they've put the debt ceiling in May. And so now what the first fight that's going to happen is going to happen in March, and that's going to be sequestration. So at the moment, all they've done is kind of just push it back. The fear over what's going to happen is certainly not gone away. It's just been delayed.
So now that the worries are temporarily on hold, does that mean that we're kind of in overbought territory at this point?
I certainly think we are. I mean, listen, I understand this market's up 6% straight since January 2nd, right? It's really had no relief at all. It's gone up in a straight line, and a lot of that was, I think, certainly part of the relief over the fiscal cliff, although I'm not really sure what real relief that was. And then we get right into earnings season. Listen, and earnings have been coming in. 62 or 65% of the companies so far have reported better than estimates, but let's be realistic. The estimates have been really, really slashed, right? So they're low estimates to begin with. It's almost impossible for companies not to beat them, right? And so in that sense, investors have to understand that, you know, what you're really looking at in terms of what was the bar, where was the bar, right? So my sense is, yes, that I think we're a little bit overbought. Do I think that we should be trading up here? No, but I think what's going to happen is they're going to push us to 1,500, and they're going to see if there's real resistance there. 1,500 isn't anything other than a psychological number. There's nothing that really says 1,500 is a magic number. It's just psychological, right? If we break 1,500, I think what you'll see is you'll get this push by the momentum guys to try to push it even higher and see where the real resistance is.
Interestingly today, although the overall market was up, actually breadth was negative for much of the day. What does that mean as we head into more earnings and some data tomorrow?
Well, so what I think is happening is you get this churn, right? You've got some companies, some stocks that have moved higher, and that there are people that think we're overbought, so they're taking some profits in some of the names that have moved higher. Makes perfect sense, especially if you're the day trader type, right? If you're the long-term investor, if you're the big asset manager institution, you're going to have this core portfolio, this core position in a lot of these stocks, and then what you're going to do is you're going to create alpha in those names by trading around a smaller position. So as the stock moves up, you'll take some money off the table. When it comes back in, you'll put that money back to work, but you'll maintain a core position, so you're always participating as the market moves.
And so what are some other key drivers you're looking out for tomorrow?
Well, you know, it's big earnings season, and this is a big earnings week, right? So all the focus is really going to continue to be on individual numbers, on individual earnings numbers, right? The big macro issues, like I said, the big kick down the road. So we're not going to talk anymore for the next couple of days about the debt ceiling and about sequestration. It's all going to be about the individual macro reports that are coming about the U.S. economy, as well as the individual earnings reports. And this is a big week, the biggest week, right? Next week it'll start to taper off, and then the week after will really be the end of it. And so I think the market will continue to respond, but I suspect that we're not going to see the market do much more than just churn right here. Now, that being said, at 4 o'clock today, or 4:05, we're going to get earnings from Apple, right? Everyone is sitting on the edge of their seat. What are they going to say? Are they going to beat the number? Are they going to miss the number? Listen, I think Apple's going to beat the number. I don't necessarily, not maybe by a wide margin, but I think they're going to come in and beat the number. That being said, you'll get this knee-jerk reaction. You'll get the trader types running right in, trying to trade right ahead of it and get out in front, right? I think that you'll see 500 as a support level. I think you'll see resistance back at the 200-day moving average, which is back up at 590. Don't forget, it's a $500 stock, so it moves 30, 40 points at a time, right? And so you could get to 590 very quickly, matter of a day or two, right? To get there. And I think that's what will happen. And then what I think you'll do is you'll see them start to dissect and pull apart exactly what Tim Cook says. Are they going to launch a buyback program? What do they think about what the future looks like? Are they being positive in their guidance? Are they being cautious in their guidance? And so that will then, once that starts to settle in, that will then dictate kind of where the stock goes.
Thanks, Kenny. This is Andrea Say reporting for The Street.